Hello, chart watchers, and welcome to this Wednesday, January 24th Market Watchers Live show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. You picked a great show, and for our regulars, welcome back. Let's take a quick look at what's going on in the market today thus far. You can see, first of all, actually, I will switch it over to the 2-day, give you a quick update here. Started off pretty strong. NASDAQ, S&P 500, Dow Jones, you can see everything really up early in action, first half hour to an hour this morning. But we have seen some selling kick in, and the S&P 500, NASDAQ, and Russell 2000 all went into negative territory, with the S&P sitting almost flat right now. The 10-year Treasury yield continues to move higher, so we're seeing a continuing exodus out of the bond market, with the 10-year Treasury yield currently at 2.65%. Financials leading the market earlier. I'm not sure if they still are, but you can see that the Xlf is still up, even though the market has turned negative. The full-line insurers making a pretty nice move and threatening a big breakout. But so far today, this is one of the best industry groups within the space. Hartford Financial also looking pretty interesting. In the pharmas, Novartis making a big breakout. We'll look at that chart in just a bit. But let's look at the other side of the coin. We've got the semiconductor struggling today. Texas Instruments came out with their report after the bell yesterday. You can see the market not exactly embracing it to the upside. And then finally, airlines. United came out, announced there might be some price wars. And as a result, you can see many of the airlines selling off. And with that, let me bring in my co-host, Erin. How are you doing this Wednesday morning, Erin?
I'm doing quite well. Nice brisk, 37 degrees on the patio this morning. But we are going to get up to 78 for the high. So should be interesting.
37?
Yes, I know. Gets pretty cold here in the mornings in Corona, but we usually get that warm up by the end of the day, so it's pretty nice.
Well, speaking of warm up, we do have a guest in today, Scott Carney from Harmonic Trading, and Scott, I believe, is in the southeast. How are you doing this morning, Scott?
Warmer than 37 degrees.
Where are you at?
I'm down in Miami.
Okay. Oh. Yeah, you're not going to see any 37s down there.
We almost last 2 weeks ago, but that was a bad winter for us, and winter's almost over. So it's February.
Yeah. You know, I was down in South Florida. I have family down there. And at the time I was living in the DC area, and I was down there in February. This had to have been, I don't know, maybe 4 or 5 years ago. But I went down to get away from all the cold in the Northeast and went down in 2 mornings down there. It got down to 36 degrees. I was in Fort Lauderdale area. And it got down to 36, and I'm thinking, it can't possibly follow me this far south. But anyway, Scott's going to be with us today. We're going to get into harmonic trading. We'll take a look at that probably in about 10 or 15 minutes, so just stick with us there, Scott. And with that, Erin, I'll let you take it over for the schedule and the agenda for today.
Absolutely. So here's our weekly schedule. At this point, for the rest of the week, we have Tom's workshop on Friday. He's going to go over trading with the PPO and moving averages. So you'll want to see his strategy for that on Friday. Today, however, we're going to have, as we were saying, Scott Carney's here, and he's going to talk about his harmonic trading system. And we have the 10 and 10 to 1, with our first stock being Spectrum Pharmaceuticals, SPPI. So if you want to go take notes on that before the 10 and 10 to 1, you're welcome to do that. And then we're going to finish the program out with chart breakouts. We're going to be looking at some of the stocks that have broken out recently and, letting you know what's out there at this point for possibilities, as always. And with that, I'm going to turn it back to you, Tom, for some technical headlines.
All right, sounds good. First, let's take a look at some of the news that came out this morning. We had the November Fhfa housing price index. It rose 0.4%. The market was expecting 0.5% rise. January PMI composite flash came in at 53.8, market looking for 54. And December existing home sales came in at 5,570,000 units, and the market was expecting 5,750,000 units. So actually, we had a little bit of a trifecta in terms of negative news this morning, which has been kind of unusual. But earlier, the market really didn't care in the early action. And if we scroll in here and take a close-up look at the 10-year Treasury yield, you can see that there's been a lot of good news, economic news, built into the yield. A lot of folks bailing out of the bond market. Treasuries have been on the rise, and as a result, a lot of that money is finding its way over into the stock market. So something certainly to keep an eye on, because as yields continue to move higher, typically that money does find its way into the equity markets. A couple of stocks to take a look at are first an ETF, the Xlf Financials, having a pretty good day. And of course, with the yield moving higher, you can see that the financials have been moving up with it. The bank index, the DJUSBK, normally participates with that yield. When that yield is rising, that's normally excellent news for banks and their profits, their net interest margins. And you can see a huge move up here in the bank index thus far in January, following a nice move off the September lows, which coincidentally is when we saw the bottom on the 10-year Treasury yield. So great action here in the financials and in the banks. Also mentioned the full line insurers, the DJUSIF. So if we pull this up, take a look here. Beautiful move the last couple of days off of this now rising 20-day moving average. And the interesting part is, if you look back on a weekly chart in this space, really over the last 13, 14 months, we've been going mostly sideways. So if you're looking for areas of the market maybe that haven't participated to the same extent that some of the key areas that we look at all the time, the semiconductors and so forth, a lot of the technology areas with internet, some of the consumer discretionary and industrials and so forth. Well, here you have full line insurance trying to make a very significant breakout up at about the 57 area. We're currently at 56, 55. Certainly something to think about as we go forward. Mentioned the semiconductors earlier. Let's pull up this chart. It's the DJUSSC. And nothing wrong with the chart, actually. After moving up, kind of sideways consolidated, a little bit of an ascending triangle, made a breakout just about a week ago. Coming back down, we should find very good price support. If we zero in again, let's take a look here. But these tops over the last couple of months came in just above the 3,400 level. So coming back down, 3,400 certainly would not be shouldn't be a problem as long as we hold that level. And you've got the rising 20-day moving average at 33.82. So both price support and the rising 20-day are at about that same level. So definitely something to keep in mind there. Texas Instruments, of course, the stock most notable for bringing the index down today. Texas Instruments reported after the bell yesterday. You can see the market not really reacting very positively. But as we talk about all the time on the show, a lot of times these earnings are already built into the price. So it's one of those buy on the rumor, sell on the news kind of things. I think Texas Instruments, I think the chart looks good. I just think a lot of times when you get this big move up, many times you'll get a pullback with the earnings, and then you can turn around and go right back higher. We'll see whether or not that's the case with Texas Instruments in coming days. The airline index, I mentioned United, talked about possibly price wars. Well, the index itself didn't like it. We're seeing a lot of the airlines selling off today. Big move down in the index back below the 20-day moving average. But I'll say this, anytime I see higher prices and a lower PPO, that's a negative divergence. And so I'm not shocked to see that rising 20-day moving average fail to hold. So I'm actually looking more for some support down closer to maybe the 280, 285 area where we had topped previously back in October prior to the breakout in the second half of December. Notice when we came back down recently in early January, we did hold around the 285 area. So I'd be looking for some support between 280, 285 and that rising 50-day moving average currently at 282 as well. So there should be a confluence of support in that area. There was a ton of earnings news out. I can go through some of these with you. First one is Abbott Labs Abt. They beat top line, beat bottom line. Too many reports really to go over the numbers, but you can see a very strong reaction in the market. Stock gapped up, has sold off of its earlier high, but we've got a really nice PPO. It looks like prices are accelerating to me to the upside. Great volume trends. So pullback here to test that rising 20-day, maybe fill this gap, would not necessarily be a very bad thing for ABT. BHGE, Baker Hughes. And this is going to be an interesting day for Baker Hughes. We saw a little bit of a gap up after they reported their earnings. They beat on the top line, bottom line 15 cents versus 14 cents. So they beat there. And I'm wondering if we're going to just trade intraday below this rising 20-day and come back up and hold this level. If we go back further and take a look at the weekly chart on BHGE, you can see that we were in a downtrend, and just recently, beginning of this year, stepped up and broke this downtrend. And normally when that happens, what you're expecting to see is support at the rising 20-week moving average. And currently that is at 33.59, and the price is at 33.84. So from a longer term, bigger picture view, I think that BHGE, turned pretty bullish when it broke this downtrend. And so now it may just be getting a test of that rising 20-day moving average. Certainly something to keep in mind, or I should say 20-week moving average. But here, a recovery and move back up above the 20-day, having already seen what I was just showing on the weekly chart, I think would be pretty interesting. GE reported today. Okay, they missed on their revenues, they missed on their EPS, and take a look at their chart. I mean, who didn't see this one coming? The stock has bounced a little bit off its lows, but this selling that's taken place for the last 3 or 4 months has been on extremely heavy volume. I see a lot of distribution taking place here in GE, and as I've said previously, I've got to let things settle down. This is just not the type of stock that I would be interested in. Illinois Tools Works, ITW. You can see another gap up here, possibly shooting star candle, though, with some decent volume and with earnings off of an uptrend. So anytime you see that, at least, kind of paints the picture to me that perhaps we're seeing maybe a short-term top, but we'll see how it finishes out. Candles can change. This is an intraday candlestick. So by the close, it could look totally different. But at least for now, a little bit of a warning sign there. Norfolk Southern, NSC. Take a look. This move back with earnings today actually is testing that rising 20-day moving average. This one's going to be interesting to see whether or not we hold and reverse off of that 20-day moving average. NVS, I mentioned this one earlier, and this one is really a stock that I've got my eye on. Look at all the sideways consolidation here before we got this blowout earnings report today. This NVS came out. Their revenues were $12.92 billion. The market was expecting $12.62 billion, and their earnings came in at $1.20. Market was looking for $1.16, and you can see traders really rewarding the stock. But one of the chart style buttons I use is a relative chart. And so with NVS, I'm just going to click on this for a second. I want you to take a look at all of this sideways consolidation prior to this breakout. That's number one. Number two, I've been talking about the pharmas and how they really haven't performed well on a relative basis for the past couple of years. They've kind of been in hibernation. But this last break above 550 was the first time we've seen that move in the history of the pharma index. So I think that is a positive. We got a breakout of a stock within the group. I think that's a positive. And take a look at NVS relative to the pharma index, breaking out above its prior highs. And you can see here, although we have been underperforming the S&P 500, a lot of that simply because the group itself has not been in favor. Take a look at the DJUSPR relative to the S&P 500. It has continued moving lower and lower and lower, but in my opinion, that absolute breakout that we've seen on the DJUSPR, and let me bring that up and show it to you. I think this is a pretty significant breakout. Here is the daily. You can see that taking out the top recently, pulling back, should hold that rising 20-day moving average. That's what I'll be looking for. And if we go back further on a weekly chart, and I can even go back further than this, let's go back throughout the bull market. So we'll go back 10 years. And you can see after 2.5 years of sideways consolidation, I think this is a very bullish long-term pattern, uptrend followed by an ascending triangle or just sideways rectangular consolidation, whatever. But we have now moved up above 550. I would not be surprised to see this group begin to lead. And if it does, NVS with its strong earnings report could be one of the leaders going forward. So that's something to kind of watch for. Among stocks that will be reporting tonight, one of them is LVS, Las Vegas Sands. This is a company within the gambling space that has been on fire. A lot of good stuff being built into this earnings report. Going to be interesting to see how we finish. And just a couple of quick upgrades and downgrades. One is STO, which is Stat Oil. Got an upgrade after a huge move to the upside. Probably could use a little bit of a pause, but not today with that upgrade. AUO, this is an interesting one. Morgan Stanley raised it to overweight from equal. And check out the sideways consolidation that we've seen in this stock for quite some time. And then just prior to this upgrade, you can see we got a breakout and a huge move today. Now, I think it's moved way too much to consider at this point, but I do believe on a pullback, especially back near price support or that rising 20-day moving average, this is one that could be interesting. And then on the downgrade side, VRX. This is a stock that a lot of traders like to follow, mostly because of its huge volatility. But this is a stock that recently broke out. Now, check this out. Higher prices, lower MACD. I'll tell you what, I'm even going to zero in here. So let's take a look here. Here we got the higher price, as you can see. We got lower MACD reading, so we've got a negative divergence that tends to suggest to me maybe a 50-period test or a 50-day in this case. And not only did we break out with the negative divergence, but I always like to look at the volume. And as we were trying to make these last highs over here, look at the volume. It was really just average, if that. And so as a result, we had a bearish engulfing candle, and we have seen a bunch of selling since. The stock was over $24. Now it's back down to 20. And in my opinion, getting closer and closer to an interesting area of support. The breakout occurred at 18. Recent lows were in the 19-20 range, and you can see the 50-day moving average just below 20. So VRX could be very interesting on this pullback, but I'd like to see a reversing candle. And with that, I am going to bring in Scott Carney. He is a member of the MTA and the American Association of Professional Technical Analysts. He's been a regular columnist on several well-known websites, and he presents webinars internationally. The harmonic trading approach focuses on specific patterns and the alignment of exact Fibonacci ratios. And with that, I'd like to welcome Scott Carney. How you doing, Scott?
Great. Thanks for having me today.
Oh, you're very welcome. What do you got lined up for us?
Well, just want to really thank Stock Charts, because Stock Charts and I had met Chip Anderson 20 years ago, and he gave me opportunity to write for the website when they first launched it. And so some of the first harmonic pattern articles, and that's what my work is all about, were actually released on Stock Charts a long time ago. So this is a great kind of return for me. I'm honored to come back and be contributing going forward. And also today, I want to introduce a Harmonic XABCD tool. That is a new tool available on the platform that we've developed that can trace out the harmonic patterns. And I'll explain a little bit what that means.
Awesome. Well, it's certainly great to have you, and I'm not going to take up any more of your time. Why don't you explain the whole harmonic pattern idea and when you came up with that and how it evolved?
The harmonic patterns were a personal evolution of going through a lot of work, of course, researching. Everyone reads the Elliott wave and the Gann theory, but I found myself measuring the market. And, for me, that's really, I think anybody that's a trader needs an approach that measures the market movements, especially most of us now are chart traders and looking for those signals. So whatever you're doing, I feel like your strategies have to measure market action to be able to give you price levels, reliable price levels for opportunities. The patterns really came about as a kind of an evolution of other people's work that I had explored, and then a lot of proprietary tinkering that led to the discovery of combinations based on exact ratios. I think a lot of people are aware of the basic 61.8% and 161.8% ratios, the golden ratios, they like to say in sacred geometry. I don't want to complicate it. I'd like to keep it simple, but the primary fact that these basic ratios, 618 and 1618, repeat in natural growth cycles. And I leave that to everybody to go investigate. It's fascinating stuff. The Fibonacci patterns, the Fibonacci phyllotaxis, which is the growth patterns of these proportional growth cycles in plants that are proven facts. And so I think a lot of the wave analysis through the decades of looking at this type of idea, people have been reaching for. Gann did it, although I think he spent a lot of time in astrology, too much time, and harmonic trading has nothing to do with astrology, but we do focus on these natural numbers. Mm-hmm. And starting with that 618, we analyze the market through a gamut, a range of specific ratios. And the patterns encompass those ratios and some other ABCD basic structural measurements. And they give us a really nice framework. There's there's a few other principles that are applied in terms of execution and management. But the patterns themselves and the XABCD tool that we have now for stock charts gives the user the ability to at least trace out these structures, begin to kind of understand where markets may go. You had mentioned Baker Hughes. Maybe we're going to look at a couple of examples in a minute, but some definite structures there that the simple recognition of those formations, much like a triangle or a pennant or even a clear trend channel, have become effective tools for people. I think the ratios and measurements that I've defined were some of the breakthrough discoveries, and I'll go over a few of those here in a minute. But the whole concept, I think, that I've distilled in the books that I presented, the first one being 20 years ago, literally this year in 98, I released the Harmonic Trader, which was just a self-published effort of hundreds of charts and notes that people were asking me for. And that came about. And literally, it was a matter of maybe 2 months later that I met Chip and started writing some articles on the patterns that I feel was the catalyst for the acceptance of these ideas. Mm-hmm. And so through the years, the patterns have proven incredibly effective, reliable as measures on all time frames, all markets. And, so it's this kind of standardized understanding, I think, is what I want to show people of what the alignments are and how they can apply them to even just simply understand the structures.
All right, well, I'm going to go ahead and let you take the screen and share what you have. But before you get started, would you say, from a time frame standpoint, are you more of a short-term trader, intermediate? Are you going to stick with stocks long-term, so long as they stay, in uptrends? What characterizes your trading strategy?
I think I'm shorter term. I started out with stocks. I feel that currently this market environment, sure, it's unique. It's reminiscent of 20 years ago. And it's definitely, we are in a major acceleration phase. The measurement strategies still apply the same way, and we still want to measure the market no matter how strong or how far this moves. So I feel though that my own style is, for the trading that I do, is shorter term, but I still have some longer term stock positions as well, and still do kind of a mix of long term and short term.
Okay. Well, I've been trying for a long time to convince Erin to start short term trading, so maybe you can help me.
Good luck with that one.
All right, we'll let you get going, Scott.
Well, thanks. I appreciate that. And I think no matter what, again, a lot of what I'm going to talk about today is about identification of price levels. And so the harmonic pattern ideas and strategies that I present are one part of a trading process. And so, to your point here, certainly we need to be mindful of not only after we identify the opportunity, but there are strategies for execution and management. And those, I think, for even on a shorter term level, for shorter term traders, they need to know that going in advance. What I'll focus on today is just showing the patterns and just the concept of that the patterns show us areas where at a minimum we expect maybe a counter trend pause or reaction. And there's assessments that we can make at those points. So let me start by just showing what the patterns look like, the illustrations of those patterns. And I can pop that up on the screen here. Okay. And there we go.
Okay, we got you.
All right. So I'm going to just show a couple of the slides. And these are M and W formations, if you can see that all right.
Yeah, you might want to, I know we had gone through having you share just the presentation because we're seeing the whole.
You're seeing the whole thing?
Yeah.
Oh, I see what, one more. Let me try one more time here. How's that?
Perfect.
All right, there you go. So what we're looking at is we're looking for movements, triangles, wedges, whatever, but these are M and W formations. And they have a couple of components, but let's just talk about the ratio proportions. We look for very clear high to lows. This can be an important low point, and this is a Gartley pattern. This is a certain type of M or W retracement formation that we look for the combination of ratios, namely the midpoint has to be at a 61.8% level, and I'll get into that in a second. But we have an expected completion at the 786. But at what point can we identify these structures? Well, we certainly need the X, the A, the B, C, and then as we're coming into this point, as we violate the B point, it's at this point here where we really can get clarity on the possibility of the pattern and it's what I call potential reversal zone. That's what these measures represent down here. So that's one structure. Another structure, which is also another retracement pattern. It looks similar, but the measurements are different, which is another big breakthrough. This is a bat pattern. And so we look at this completion at the 886. Similar M formation, your X to A is usually a distinct high to low, with A being the highest point. The B point should be roughly less than a 618, but closer to a 50% level. The C point cannot violate the A. That maintains the M structure or W structure integrity. But in this case, we're looking for a larger retest of that initial point of X. So those are two retracement patterns. And I just get into the two extension patterns. Now they're extension because the pattern completion point is beyond this initial point here. So from X to A, this is another M formation, but instead of looking at it here, we're looking beyond X. And that's because our midpoint at B is a lower number. It's a lower ratio. And I'm going to show you guys a couple differences here in a second that will make it really clear. But once you get the kind of catch your eye for what these formations are all about, then with the new XABCD tool, and let me switch over to that. Can you guys see that now?
Yes.
Okay, with the chart?
Yeah, but it's showing everything on the left-hand side as well.
Okay.
We're seeing your PowerPoint.
1 second. There you go. Okay, great.
There we go.
All right.
That's good.
So this is, let me trace out. I want to go back to that Baker Hughes. That I thought that was a really, that was a great one. BHGC, correct? What is Baker Hughes again? BGHC?
You can just start typing Baker. It'll come in.
Oh, okay.
It's BHGE. I'm sorry.
Yeah, that's different than the old symbol.
Yeah.
So here is Baker Hughes, and I just because it's relevant. So let's first talk about the XABCD tool and how to access it, and then we'll talk about this formation and how to kind of look at what Baker Hughes, this W formation Baker Hughes gave us on this recent drop. So first, the XABCD tool, we want to access it. Go down to your annotate button and open up the chart. Now, this is actually a unique XABCD tool. This has got a great feature where we can simply point on each of the M or W structures, and it's going to automatically trace it out. So if I'm looking at that, first, let me draw it manually and just show you guys what that would look like. So there's a distinct higher low. I think we can all agree on that. The next point we would want to look for, and just tracing it out. There's our midpoint at B. Here comes our, okay, great. And this is just using the trend line, but manually. So that's a double test that sets up the final W structure. Now, again, remember, we look for a retracement pattern, meaning if that's our initial point at X, then we're looking for a retest of X below that line. But this W formation, and let me bring that better into view, then is the primary basis for looking at that as a corrective pattern, corrective cycle. It has the properties of the W formation, but how do we know if we look and say, all right, Scott, do we sell it there? Or do we sell it up here? How do we sell it? And that was the real breakthrough for me. There were people doing this work before. Bryce Gilmore, among the best, that had done this W formation work. J.M. Hurst, going back way back, also did some of this type of structural assessments. But for my work, a few of the measurements that I found were really yielding the success were, first, let's look at this B point. What's the ratio there? Because the symmetry of this, if this W structure is supposed to represent a corrective formation, and we see that even in a downtrend that Baker Hughes is in, that would be a nice corrective consolidation pattern before the drop. So now with the XABCD tool, we can go in here on the side menu, select XABCD. Now we can pick those points. Start there, point. There's your X, there's A. Just have to touch the extreme of the low. There's B, there's C. And now D, we can take it all the way to the D point and look at where that completes. And in this case, the exact high here is at 89.8%. The midpoint B here, okay, that's less than a 618. Now, some of the finer rules that I talk about with the Gartley requires a very strict interpretation of the B point. It has to be very close to the 618, plus minus 3%. And that's part of the structural rules where these M and W formations have specific measurements that are immutable. We don't change them under any circumstance. So I see that this B point satisfies the B point requirement for the BAT structure. So I'm anticipating an 886. The 886 is the number. That's the number that within the harmonic set of ratios that we use. Let me move that one out. As kind of the standardized model. Now, yes, it does go above that slightly, and it's very common for, there's 886 right there. It's common for the measured model harmonic levels to be exceeded, but that's where we really focus in and look for corresponding action, corresponding confirmation indicators. I personally think RSI is probably the finest indicator ever created by Wells Wilder. I've devised my own harmonic strength index that is a expansion of some of the basic ideas of this, but I still say that what we have as the free tool for RSI is it's what I use as my primary basis, and I recommend that everyone else does. And we can see the completion of this W structure at a simple RSI extreme. That is that simple confirmation at the completion of a measured pattern is some of the best and easiest ways to look at these M and W formations and say, okay, is there something happening here that would correspond this structural formation, like a stop sign or a yield sign, even better, is telling me we need to pay attention. There's some potential harmonic resistance. And oh, wait, we've got some RSI here clearly reversing in that zone. So that's a real simple way. Again, that's just one way to look at a retracement pattern. And we come up with maybe look at one or two other ones. Let me go back at it and save this. The other thing you want to do is save the chart, and this is actually a great feature too. I started my own little harmonic market list here, and save it to your harmonic markets or whatever you want to do, and then upload it. And those patterns are going to stay there for you. So the work that you do, I find that that's going to be helpful too. So you go back and you can revisit your work, look at what patterns you've traced out there. Let me see if I can come up with, take a look at one or two really nice ETFs. Really quick, let's look at GLD. Let's look at gold. That's been, yep.
Question. I mean, I know you're looking at all the price action and so forth. Do you take into account volume at all in your analysis?
I do look at volume. I think I from a general perspective, in terms of markets and liquidity, there's a certain level that has to be there if you're trading on a daily time frame. You know, I think you want 500,000 shares traded in stock markets. If you're trading some of the futures, I tend to stick with the more liquid markets. Absolutely. The formations and the patterns, you're going to see them in all markets. And you'll see them even in penny stocks, but are you able to trade them and get the same prices or the same execution fills? That's a whole nother question. And so I, again, just say stick with the biggest stocks. There's plenty of opportunities out there and the most liquid markets.
Okay.
So yeah, I was going to show this GLD example as well, where not only can we look at the pattern for reversals, but we can also look at it for as a framework. Again, if the pattern possesses the proper ratios and we can analyze and assess that, these patterns have a tendency, like a magnet, to satisfy the minimum objectives and give us a pretty clear target of from a harmonic perspective of what to measure, how to measure it, and what we can project. Now, we know the market's been moving aggressively, especially the tech stocks. And I wanted to show, actually, before I show the gold, I'm going to show, you had Novartis up, which was a really good example of a breakout. And we've been in this market here where we get stocks that are moving aggressively like this. Now we can apply that same M and W framework to get an understanding of how high this may go. I mean, this caught my eye when you showed it. And so let's just go back to annotate this, and let's look at the XABCD of this breakout. This is pretty strong. I don't disagree that this thing probably does need a little bit of time and digestion, but if we look at this, it's kind of stretched out. It's a W extension pattern. There's still the measures. We apply the standard harmonic XABCD framework to it. going off of an extreme high or low. Now, this is a good example because this high is slightly higher than that high. I prefer to go off of extreme highs and lows. So we can take that one and utilize that as X. There's A, there's our B point, there's our C point, and so far, let's see where we are on D. Okay, this formation right here, there you go. And I'll bring up the illustration in a second. I'll switch back. This has got a extension, a W extension pattern formation. Now, our typical minimum number on most extension patterns is a 1618. That is the primary number. Well, let's look at where the 1618 is on this. All right, it's right about right there. Okay, it's really critical to see that kind of action of what happened here when we completed this W formation. We don't automatically execute at the numbers. As a matter of fact, one of the execution rules is that we don't even consider the trade until the pattern has completed. As again, some of the finer execution rules, but structurally, this chart has an enormous amount of strength. I agree with what you were saying here. It still has a ways to go because of this strength at that 1618 number. I like to think of the measurements, the patterns, the even individual ratios like a 1618 as having built-in expectations. We know that the market can move only so far, so fast. Sure, it can keep running. We've seen it aggressively, especially NASDAQ, been moving aggressively well beyond 1618s. But I will always consider a price action that reaches a 1618, especially on initial test, as in a state that is naturally overextended. Now that can continue, but those are my basic expectations. What I want to look for is immediately what happens tomorrow and next couple of days, because if this continues higher, then this natural pattern is getting violated and you're looking at something much larger. And I don't want to complicate it. I don't want to get into it beyond that, other than we want to focus on these natural levels. What happens at these natural levels, these natural measured levels of support and resistance are extremely significant and can give us clues of where the market can potentially go. I would look at this pattern completion and say that's quite strong. And if this violates and continues higher above today's high, then my next set of ratios that I would consider would be maybe a 200%, which is much higher. And again, that's just looking and understanding what the levels are. But if I'm long the stock and I see this bearish pattern, but its action is quite strong, I'm going to respect that strength. And in fact, if it violates the pattern in the next day or two, that would be a significant continuation where you would see that strength, that acceleration unfold. And in fact, if anything, I would argue that a breakout above today's high then kind of confirms this new acceleration character, where you can expect this thing to maintain an accelerated trend line over the next several months. And that is some of the other relationships that I feel a lot of my students, they're able to really begin to perceive the differences in character, and able to understand, say, an accumulation phase versus a consolidation phase, and when that's triggered. And even I like to call them harmonic breakouts, and I mentioned this before, where when your CD leg is violated, that's where the pattern really begins to take shape, and you can begin to anticipate this completion. And again, I'm keeping everything very simple here. What I really want people to understand is that these relationships and these proportions, they have meaning. And now with the XABCD tool, really recommend to go in and play around with the different, just sketching out the M and W formations, see what it looks like, see if you begin to notice some relationships maybe you haven't, or see how it works with your existing approach. Because I do harmonics and I look at the markets from a harmonic framework exclusively, but I'm also very integrative, and I've gone through all the methodologies and trying to pick the nuggets from each. I think that's what's helped me kind of define the harmonic framework. So if there's other things that work, MACD, moving averages, I say go with it, because you're going to see a lot of consistencies that help to clarify the picture. I don't know if you wanted to look at anything else, if you guys had anything specific or any questions, but I could go through one or two other ones. Let's go back to that GLD example. And show you how that I'm looking at that. This is in this case, again, another pattern, but on a longer basis, where we have the markings of, let me bring this in here. Okay, just in this latest move here with GLD, we see the last 2-3 years stabilizing after the bear market. But how to look at this now? Is this going to be a real move for gold, or is this just going to roll over? One of the ways that I would look at this is just analyzing the last year or two of action, and let's look at what happens on this structure and just measuring out the B points. Now we could grab this B point, that might work, but this is actually the better, more relevant B point. So let's measure that. Click that, it's your C. Sorry, let's try this one more time, guys. X, A, B, C, D. Now, again, W formation. How am I looking at this? And again, for gold, I'm not, for the extension pattern, I'm waiting for the B point breakout here. And it just unfolded here. I guess that's today. Yeah, or this week. And this is something I'm starting to look at. If we're going to see gold pick up, we break out above that B point. Okay, around 128, 130. My expectation target, because of the formation of this structure, doesn't come in until about 148, 147, where 146, 147, where, because this W formation with that B point at an 886, this is called a deep crab pattern, tells me that the structure itself is projects to a 1618. Oversimplification, no doubt. And I think anybody that's new to the structures of the measurements, you're probably saying, well, how can that be? And it is related to the reciprocal relationships of these movements. And again, there's lots of free information on my website, and we're going to bring a lot of resource information to stock charts so that you guys can understand more about why this phenomenon works. But this is how I would be framing out that ABCD. And again, with what we have for this week, with this B point breakout in this structure, I'll look next week for that continuation of the upside.
Hey, Scott. Now, if you're looking at that, and I'm just trying to figure out, okay, if that's your buy point on that breakout of the B, where would you put a stop? So you get the breakout and you decide to get in. Where do you stop? Is it if you break back down below that B, or is it all the way down to the C?
I would look at it like this is kind of the trigger for me. Then I would break this down on, say, a 60-minute. or even a 4-hour chart. And I would be looking for bullish patterns that give me little pullbacks here. Is one way that I think of it, where, again, much like the way that I look at pattern completions, where I wait for them to first complete before taking the execution. For the breakouts, and it's a little bit more of an advanced strategy, but for the breakouts, I am looking at that as kind of a change in character. And so my stop loss would depend on, okay, if I get a little pullback within this daily, weekly time frame, give me a pattern, give me an ABCD, give me something that's maybe pulling back on a weekly basis for the week. It would depend on that, but it would change my bias shift where this consolidation we've seen in gold, I would start to say, okay, this is starting to give us signs where this breakout to complete this pattern is an area where I want to favor the bullish intraday opportunities that develop. And that might happen slightly above the breakout point. But if the daily analysis is correct and we're, that's going to get pulled up to the completion of that pattern, then those intraday setups, bullish setups, are going to give me larger moves, better risk to reward. So some combination of looking at other time frames, but from an identification perspective, we're kind of entering, I feel, into potentially a new phase for gold where we see this accelerate.
Okay, cool. We are going to move over into the 10 and 10, but what I would like for you to do, if you can stick around, is maybe as I go through and annotate these 10 stocks, if you could maybe look for a pattern or two within these 10, and maybe after I'm done, come back and illustrate those for us. I think that would really be interesting, if you wouldn't mind doing that.
You got it.
Okay. All right, then. With that, we are going to switch over just temporarily for the 10 and 10. Very interesting talk with Scott Carney from harmonictrading.com. And we will be getting back to Scott here in just a couple of minutes. But first, let's go ahead and switch over. And Erin, I didn't write it down, but what is our first stock?
Our first stock, actually, I'm going to share my screen real quick here so we can see the RRG of what everybody requested today. If I can get my screen.
Yeah, I like that new feature. I like to see how the RRG, how they all line up.
All right, there we go. So currently, this is what we're looking at. The only one that's in that leading category is NUGT, so we'll probably include that. But as you can see, there's only a few that are moving in that southwest negative direction. I'm going to pull it out a little bit. There we go. So anyway, I'll do my very best to pull some of those northeast travelers, but we'll probably have a few others in there as well. So let's get started with SPPI.
Okay. All right, hold on one second here.
I know the share screen is being a little bit wonky this morning.
Yeah, I know. All right, I think I got things under control here. All right, let's, what was the first symbol? I'm sorry.
There we go, SPPI.
SPPI, okay.
We were just talking about pharmaceuticals, so interesting that this one was the first choice.
Yeah, I really like what's taken place here just in the past couple of days. You can see the volume picking up. But let me go ahead and annotate here. And, off of uptrends, I look for sideways consolidation. And I tend to look for closes, opens and closes on these candlestick charts to kind of highlight the trading ranges. But you could certainly, grab the price resistance and take it up to the intraday. Either way, you're looking at a higher high that's come in just recently. By using this number, though, I can tell whether or not we've gotten a closing breakout, which I think we did yesterday. And we're continuing to perform pretty well today. I don't know. I haven't looked at the market here recently, but I know we were pulling back. But SPPI continues to trade pretty well. And I really like the PPO here coming off the center line. This sideways action right at the center line is just simply telling us that there's no directional momentum either way. And you can really look at the chart and see that, but that's what the signal is telling us as well. That's what the PPO is telling us. But we're starting to see now that price momentum accelerate to the upside we're getting the breakout and we're getting increased volume on this move to the upside. So I think SPPI actually looks very bullish. To the downside, we've now got price support probably around $21 where we had the prior high. And then I would also be using this rising 20-day moving average, which comes in currently at about 1950, but we'll see that start to pick up pretty quickly.
All right.
I like it. If you don't give me a second, I think that's actually fits exactly kind of what we were talking about before.
Okay.
You got a W structure with that breakout. And so perfect way to look at the other things you've recognized, especially the expanding volume. And then so this structure where you have it we triggered that just 2 days ago. And so now today is time to look for entries.
Okay. I thought we were getting a little bit. I don't know if you were hearing that, Aaron.
A little bit.
Okay. Yeah, I mean, it's a very nice breakout. And I don't know, it makes me feel better, I guess, knowing that you're seeing the same type of bullish move on this breakout.
Yeah, but 20, 21 bucks, anything in that area, this thing should start to accelerate.
Awesome. What you got as the second one, Aaron?
All right. The next one I have is NUGT. And I know this is one of those accelerated gold mines.
It's a leverage. And I'm back to. But yeah, the Direxion Daily Gold Miners Index. Now, whenever I look at these leveraged ETFs, I really try not to focus on the charts of the ETFs themselves. I typically will go and look at the index because you do have erosion over time in the triple leveraged ETFs. So sometimes you might think you're getting a breakout when you're really not on the underlying index, or vice versa. You could be thinking you're getting a breakdown. So I think it's really important on this to decide whether or not you're going to buy this based on the technicals of the underlying index. But having said all that, just simply looking at this chart, we do have a nice breakout. And anytime I see momentum accelerating to the upside, I always look for strength on pullbacks to the rising 20-day moving average. Now, again, I don't know if that's taking place on the gold miners index, but you can see here on these pullbacks, that's when I think you have your best reward to risk setup based on my trading style. And so, jumping in after it's made a move like this, I think can be just a little risky. Well, a lot riskier, because again, if I'm using the 20-day as my stop, now all of a sudden I've got a lot more room to the downside before I can get in. So my strategy typically is to either buy immediately upon a breakout after sideways consolidation, or I like pullbacks to the rising 20-day.
All right, let's see. Our next one is going to be the Van Eck Vectors Oil Services ETF, OIH.
Yeah, well, I love energy. I mean, energy's been running. Problem I have here on this one is that there is a negative divergence in play. So you do have prices continuing to go up. I like to see the PPO going up with it. And right now that's not the case. You have higher prices. You got the PPO rolling over. So that is just a warning sign. It's not a guarantee. It doesn't tell us that prices are absolutely going to go lower. It's just, it bothers me a little bit to see that. And failure to hold the recent low with that negative divergence in play suggests to me we could make a move all the way back down to test that rising 50-day moving average. So for me, I'd be a little cautious. I like the group. I just think it's run a lot, and it wouldn't be a bad thing to see a little bit of consolidation here.
All right. Let's see. The next one I have for you is EZA, which is the South Africa ETF.
All right. Not too bad. I think that this is another perfect illustration of pullbacks hitting that rising 20-day moving average. We moved higher. We were very overbought. We got that relief. Saw the RSI drop back down below the overbought level, and then we took off again. Now, when we first made this breakout, and you'll see this a lot, especially in mature uptrends, when you first make a breakout, you're going to generally see a negative divergence, but notice price action continues going higher. That PPO continues to strengthen as well. And eventually you can see these negative divergences be eliminated. So I think that this one still looks okay. I think you've got great price support and the rising 20-day coming in just below the 71 level. And I think as long as that holds, I would be okay with EZA in my portfolio.
All righty. The next one I have for you is Verizon, VZ.
All right, VZ. Well, I think they just reported earnings, if I'm not mistaken, and they did break out. I don't like yesterday's candle much, but it did manage to hold on to price support. So I think for me, with the negative divergence in play, higher prices and the lower PPO, I think price support needs to hold here. So as long as we continue to close above 53, I'm okay with Verizon. But with that big reversal yesterday, if we were to go back down here and break it, lower PPO with a higher price, that's going to be at least a signal of a possible period of consolidation. So for Verizon, I'm bullish, but I'm cautiously bullish.
Pretty big pattern that weekly, up around $55. Really nice butterfly structure. So I agree with that. I think it's for this breakout is probably not going to be that strong. I mean, you got a perfect butterfly at $55.
Okay, sweet.
All right.
Maybe, actually, at the end, maybe, Scott, what we can do is have you pull up the VZ on your chart and just illustrate that butterfly pattern.
Okay.
All right,
Awesome.
what you got here?
Okay, next one, the ever popular Apple.
Yeah, I was looking at Apple earlier today. It's pulling back. I'd like to see it hold that rising 20-day. We got this breakout. Volume picked up a little, certainly more than what we had seen previously. So I like the breakout. And that PPO was starting to turn back up again. So normally I'm going to like to see a test of that 20-day moving average hold. And so far, we are beneath it and not holding. So if we fail to hold that 20, I would be looking down perhaps to the 168 area as a possible move to the downside, because here was the top that we saw where we just got this breakout. And you can see the volume had picked up a little bit. So you had price support and the rising 20-day coming together near that 176 area, maybe just above. So, if we get a reversal today and go back up and close near the high, we'd have a nice little hammer at price support at the rising 20-day. But short of that, if we continue to sell off, notice the volume is not light today. This is a very heavy volume day on Apple after it failed yesterday to clear resistance. You can see it came back down, closed near the low. So short-term, Apple is starting to show a little bit of bearishness, although I still love their long-term chart.
Yeah, and this is actually a good example. The PPO tops are rising technically, but if you go pull up a PMO chart, you have a negative divergence with those tops. So they aren't exactly alike. Everybody says they look the same. Well, yeah, they look the same somewhat, but they do give you different information.
All right.
Apple, another pattern too.
Oh, there's another pattern there.
Yeah, sitting right up above a 1618. It will go out if maybe towards the end I'll go show one or two of these, but yeah, another one where you see this thing dragging right at that harmonic resistance where the pattern completes. I'll show that to you later.
Okay, cool.
All right, excellent. The next one I got for you is KBH. I think that's KB Home.
Yeah. Interesting. We got new home sales coming out, I think, tomorrow morning, along with initial jobless claims. I really like where it sits now, only because, not to say it can't hold, that it has to hold support, but I really like the reward to risk. This is a company that came out with strong earnings, gapped up, and this is really kind of fits my trading style. I love to trade these gaps where you come back down, fill the gap, lighter volume after you made the big earnings push to the upside. So this is a key area of support, both with gap support and the rising 20-day moving average, which is at 34.17. So after getting up to almost 39, to me, that's the target. And short term, I could keep a very tight stop. So KB Homes looks kind of interesting, but it's not as important as an earnings report. But new home sales coming out tomorrow definitely could create some volatility in this space.
All righty. Applied Materials, AMAT.
All right. Well, full disclosure, I own Applied Materials. It's really the only long-term holding that I have. But I do own this one, and I'm not really in any hurry to sell just because of the long-term bullishness. But short-term, I like the tests of the rising 20-day moving average holding. Clearly, we've got to get through the 60.5 area. This was when Applied Materials had reported very strong results back in November. Here, if I just annotate. So what I would be looking for is at some point another test of that 60.5 area. We'll see whether we can get through. And to the downside on these pullbacks with a rising PPO, I'm going to look for this pattern here to continue, the rising 20-day to hold as support.
All righty. The next one I have for you is TriNet Group, TNET. And this is number 9. So one more after this.
I'm sorry, what was the ticker?
TNET, TriNet Group.
Okay.
It's a
I think it's, I'm sorry.
It's a cyclical.
Okay. I think it's consolidating sideways. And I tell you what, anytime I see that, I don't like those candlesticks where you sideways consolidate, intraday make a breakout above those prior highs, and then come back down and sell and close below. To me, that is distribution taking place. I'd be really careful anytime I see that on a false breakout. And you can see we really struggled since then. But the recent low, we've not put in a nice hammer. So I think we're trading in a range currently following a recent uptrend. My guess is that the next move, big move on the stock's higher and we get the breakout.
Okay, the last one I have is Ultra Clean Holdings, UCTT.
All right, UCTT. Oops. Typo. UCTT. Well, I like the recent action breaking out here above the prior high, but I don't like this candle moving back down below that rising 20-day. We saw a lot of selling back at the end of October. I'm assuming that that was with earnings. I'm not really familiar with when UCTT comes out with earnings, whether this is earnings related today. Looking at the volume, I'm guessing it's not, but they're probably getting close to an earnings report. It's not my style. I think that there are a lot of others in this space that look better, and I believe this one is in, I think it's in semiconductors technology, but I could be wrong. But this one, anyhow, the key price resistance level, gap resistance, is going to be up near 29. To the downside, I mean, you got maybe trend line support, but we're losing that rising 20-day moving average. I'm just a little, I would say I'm neutral. For me, I would just stay away from it. I don't see anything that I really like here. Now, big reversal off that 20-day would make a difference to me later in the session. But for now, I think I would pass.
All right. Well, let's look at a summary of what symbols we covered. And then, Scott, we'll give you a few minutes before our market update to go over, I think you had 1 or 2 patterns to show us. So today's symbols, there they are. I will have these up in the in the Market Watchers Live blog chart list. And just go to the blog's main page and you can click on that chart list and you'll see all of those charts that Tom just annotated. And with that, Scott, you wanted to show us, I think, 1 or 2 charts. You can steal that screen.
Yep.
Yeah, I'm going to have to play around with this new tool that you're showing.
Let's start with that last one. That scares me.
Ultra Clean.
Ultra Clean's getting cleaned here. This is actually really interesting because here you have right at the top, there's this extension. It's a deep crab pattern, but again, our minimum, we look for that up at this W formation. We look for it at a 1618, and that's about right there. But the tolerance as high as a 2.0. So that gives us this range here where we're looking in this area of saying, okay, from a harmonic perspective, again, a weekly chart, that's where we start to think market has overextended. It's moved as far as it can within that period of time. Now, the big reversal that unfolded here, we would typically, our minimum reaction for something like that might be here or as low as here, but not all the way down here. The fact that we have this reaction down here, that means something to me. And so that's definitely ugly chart. What we have just in this latest little consolidation phase, completely agree, Tom. That breakout, absolute false breakout with this bat pattern here. And it is this W, it's a retracement pattern. We look at it really at the 886, which is where that big candle came in. And again, another situation where the pattern framework can give us that area, and then we focus in on what happens right at that area. So that area and this individual bar, that's where the pattern completes. I call that a terminal bar. Think of like the ending bar. And so I look immediately thereafter. That's very negative signs. That actually, despite the head fake, this is a substantial pattern. So I'd be looking for this to come down. Even just on this one structure alone is 2022 or so, but I think even a full retest on it to retest the low of that pattern. So that's one example of that structure telling us, yeah, this reversal, that lack of continuation is significant. And then show you one or two of the other ones you guys went through.
On that UCTT, Scott, would you short that, or because we're in a bull market, do you only go long?
No, I think for this one, again, another situation where maybe not on the first or second day, but with this kind of follow through, yeah, I'd break it down on a 15-minute or 60-minute. You're getting a pullback after in the next week, and this would be a good moving average play where you look for entries, look for kind of pullbacks. Again, I like RSI. So maybe looking for some overbought RSI that comes back into the zone. I wouldn't be chasing it, but we have some kind of check back. That's where I'd be starting to look. Maybe the next 15-minute RSI on a 70 might take a couple days, but that larger from a daily time frame, yeah, that's kind of set that trend in stone for now.
And you can go on to your next chart, but just one general question as well, follow up. If you're looking at a pattern and you like the stock, but you know that it's got earnings coming up in a couple of days, will you stay away from it, or do you still trust your pattern?
I'm going off of the pattern. It really depends on a lot of times with earnings. I've showed you guys some situations where we have these XABCD harmonic patterns completing, or they're into their CD leg. And a lot of times that if we're in a positive market, I like it. Those will act as targets for the earnings. You get an explosion and it actually, like a magnet, goes to that level. So I won't shy away from it. It definitely depends on the situation, but if the patterns are there, yeah, I'm going to stick with the measures.
Okay. What was the other? I think you'd mentioned a butterfly pattern on one of the charts.
Yeah, let me the ones I had just saved here.
Might have been Verizon.
Verizon was definitely, and that was on a weekly. So this had here is this another great structure here. I think you guys can see this W formation taking hold here off that prior high. And so just go to the XABCD. Let's mark that. This is a very clear low. Now our B point, I think we can all agree that's the B point. There's the C pullback. Now this is in extension territory. It's above that prior high. What is the B point? That's at, let's get it right on there. Make sure that that's tight. So that's at 81.7. And the butterfly is another pattern where the B point is very strict. It's plus minus 3%. It should be at a 786, which is that B point for that minimum requirement is right about there. But the fact that it is just a little bit above, it's still within the tolerance. So we would then look at this and say, all right, I'm looking for a 127 extension. And that puts us up, 55, 50 area, maybe as high as 56. But I'm not looking for a 1618 in this instance. I'm not looking for anything other than a 127. So if I'm long the stock, you got a couple points up above, but certainly when I get up there, I'm looking at maybe, do we have anything? I would look at RSI. Do I have anything in RSI? It's getting close. And so if this RSI continues to expand higher, hits my 55, 56 target, and then rolls over on the weekly, that would be a good confirmation sign. Take profits. So I'd look at that one. I think there was one other one. Maybe it was the Nugget. I think Nugget on the, let's see, it was weekly or daily. It's got to be daily.
You apply this, the harmonic trading in these patterns to the leveraged ETF, or would you go back to the index? Does it not matter to you?
It doesn't matter to me. I agree with your comments of what you said about the other aspects of, say, a triple leveraged ETF. And again, also volume, your ability to get in and out close to your prices, your measured prices is critical. I was talking about GLD earlier. Mm-hmm. Here is, this is, I don't shy away from this. I have traded this Nugget before, and when it moves, yes, it's great. But the thing I find, it is quite reactionary, where if you reach a target or you see a reversal, you can't hang around. It's certainly something that it can come against you quite fast. And if you're new to this and you're not aware of that type of behavior, you need to realize it before you're going in. But just looking at, again, this is a W formation, much like that other, the GLD, and the crab. This is a bat pattern because our B point is at a 50. And look at, here's a good example of, we talked about this B point phenomenon. So you have 4 of the 5 points, X, A, B, C. Now we're into the CD leg. Well, it's really not official until we crack that B point. And look how we get a little pullback before they go higher. That's the thing. It is a real simple strategy. Borrows a little bit from Wyckoff of playing that retracement after a breakout, that I find is really effective. That use the breakout, the initial breakout, as the signal, and then look for that next retracement, where either smaller time frame or on the primary time frame you're examining. But that is really the best kind of use of playing that breakout instead of just jumping on it, and then having a clear understanding that, all right, at the 5.0, our target up here is at that 886. So for Nugget in this move, up to $42 fits within the framework.
Awesome. That is awesome. Well, certainly has been very enlightening having you on. And I know we're going to get you back on here again. And maybe, with that, we can get into some more actual trades and so forth that you maybe have on or have put on. Are there any nuggets, any trading nuggets that you'd like to give listeners out there? I mean, are there any stocks on your radar that you're waiting for a breakout or something like that you could share?
Yeah, definitely. I completely agree with your comments on energy sector. That's been incredibly harmonic, and I'm looking for, there's some measured moves, and this is all, I pull this up really quick, but I think a lot of those, the Bakken plays, a lot of those, if you guys really want to speculate on things that have been crushed, I'll look at a lot of those like rig, and I'll have to disclose I'm long rig, but Diamond Offshore, some of the drillers, some of exploratory, even if you want to speculate on some of those like Chesapeake. I think the work that I'm doing with crude oil says we're just simply going back to a normalization, and that's my definition of normalization is back to a 38.2% retracement on the weekly chart, and that's at $75. The other, let me see, bring it up really quick, but the other thing is that there is there's Light Sweet. There's a big bat pattern, again, much in the same way that we have been looking at these formations as they come together. And I'll trace this out. We'll wrap up with this. That, first of all, here is the retracement, and off of that all-time high to low here. I'll come back. There you go. That's something that really, if the other thing, if you guys aren't utilizing the Fibonacci retracement tool, I would take a look at those basic levels. The 50% level on this is at 68. The big 618 level is at 78.70, and that's the larger level on the continuous contract, which I like to look at for the full picture. The 382, the 38.2% is at 75. The final kind of piece with that, in our XABCD world, is just tracing out what this formation is. There you go, off the low. The continuous contract has the bat pattern. This is a little bit different because it's the front month, I believe, but just trace this out. And again, here we go. Let's line up. So look at this extension pattern here. Just another W formation. There you go. So we see that the B point almost an exact 786. So our minimum level, this is I believe this is either February or March contract. All of that still points to $70, and the longer term levels are 75. So I feel that the price of crude is still, we're in full acceleration mode, but I haven't seen that in those other stocks. And I think you're going to see allocation kind of flow back in as this price climbs higher. It's going to be forced to.
Okay. Well, you have certainly given us a lot to think about. And again, I want to thank you for joining us today. You'll have to get you scheduled to come back here and follow up with us.
Would love to, guys. Aaron, Tom, appreciate the opportunity. It's great to be back with Stock Charts, and I'll be contributing some resources to the blog and to the site, and so we can really expand this information out.
Excellent. All right, there he goes. We got Scott Carney. It was awesome having Scott. He's with harmonictrading.com. And I know, Aaron, we've got just a few minutes here, but I thought maybe if we could do a really quick update, let everybody know what the market is, and then maybe share just a couple of chart breakouts. And then
I had about 4, so I'll be quick about it. All right, so for our market update, real quick, I'm gonna go ahead and refresh this. Well, we could see the markets had a beautiful morning, but we're really tanking right now. I mean, since the intraday high was hit, we've just continued to fall. The Dow is now just above 26,109. We can see that the NASDAQ is also falling. Small caps are getting hit pretty hard with the Russell 2000. Canada, TSX, never really made it into positive territory today, but continues to fall into the trading day. You can see Treasury yields up, but have pulled back slightly. UUP gap down, moving sideways at this point. You can see commodities are up slightly. USO is moving higher after testing yesterday's close. We have gold gapped up and is also moving mostly sideways at this point, reading 128.65. Volatility index is rising. We're now seeing readings about 1215, and our declines are currently leading advances. Not a big surprise there. And with that, I'm going to conclude that market update and move on into some chart breakouts, because I did have a few interesting ones I thought that came through. And we did have a question. They said, hey, you show us these breakouts. Well, how do you play them? What am I supposed to do? It's already broken out. Well, let me look at a few of these and give you my thoughts on that. With this one, I'm seeing, we got that great breakout. I would expect to see a little bit of a pullback here, but we've got that PMO buy signal. You can see that volume is going the right way. We're getting some accumulation here. So I thought that one was an interesting one. So I'd look for that pullback on that one. This one I think is real interesting because we haven't quite broken out above this previous overhead resistance at this previous high. But I do see, as we consolidated downward, we're now looking at a double bottom, and we have executed that pattern with today's move upward. But I can tell that this is probably a shooting star lining up, so I'd be a little bit worried about that. But if we get if that double bottom does activate, execute as expected, we would expect a move of about 43, about $3 on this one. So could be a nice move there. The California Water Services Group came up for me. And again, double bottoms are generally reversal patterns, but, it's kind of hard to ignore this very clear, clean double bottom pattern. Of course, if you get that breakout up over that overhead resistance, which I think is in play, we just got a PMO buy signal here. And so you would look for a continuation here of this move after the breakout. Look at the size of this pattern, add that to the top, and we're looking at a pretty good move there. And Monmouth Real Estate was the other one I had. And in this case, we are falling lower. The PMO is starting to decelerate before the PMO crossover at this point, but I didn't draw in the declining tops trend line, but at one point we were above that. So this one, I would look, it's not really a chart breakout just yet, but I think we're on the road there. I just got that 520-day EMA crossover. So to find these stocks, I used my technical scan that basically measures PMOs that are now starting to rise, but then also looking at recent just happened 520-day EMA crossovers. So that's how I look for my chart breakouts. And that's all I have for that, because I know we have only 5 minutes. Do you have a few you wanted to drop in there, Tom?
Yeah, I'm just going to go over a couple real quick. First one is Alibaba. This was actually a setup that I had back on Monday among the trade setups. And I really like this pullback into a right shoulder. So you had the left shoulder neckline, the head came back up, put in the right side of the neckline, pulled back into a right shoulder. And look at the volume here the last couple of days as Alibaba's moved from about 185 up to almost 200 at today's earlier high. It did make a closing breakout yesterday, so I do like this one a lot. Even if it fails to hold this breakout level up close to 192, I expect that rising 20-day moving average is going to provide some really good support here. So I am a big fan of Alibaba. ANIK, this is Anika Therapeutics. You can see it's been making steady progress throughout 2018, finally cleared the October high, and even with the market reversing, this stock is not reversing. It is continuing to trade very strongly today. Looks like it is ready and poised to make the breakout. And the last one I had was Sangamo Therapeutics, another therapeutic stock in the biotech space. But after sideways consolidating here for almost 2 months, we saw earlier this week a nice move higher, pick up in volume. Today we are reversing back down, but this again is another one that I think in the 18.5 area, that would be price support and gap support. And the rising 20-day is coming up from underneath pretty quickly, and that's at 1779. So those are some of the stocks that I certainly would have on my radar as chart breakouts. So there you have the chart breakout slide. This is just a quick recap of the 3 that I showed you, the 4 that Erin showed you. And with that, there was one question that came in. I want to just address that very quickly if I can. And the question is, if I have a stock, how do I find out which sector and industry group that stock belongs to? And so let me pull this up very quickly. And while I'm doing this, Erin, if you have some final thoughts on the market, we know with this reversal, what do you think?
Well, right now, actually, I was as I did that market update and noticed that the VIX is climbing quite a bit. I went ahead and pulled up my my climactic indicators chart. I'll just grab it real quick so you can see it, what I'm talking about. But as a lot of you know, I look at the VIX on a very short-term basis. Over the next day or two is how I use it. I invert my scale because in my mind, when you get very high readings, that means people are getting bearish. And when it drops below that Bollinger Band, I look at that as an oversold reading, because sentiment being contrarian, I would look for a breakout after I lose that bottom Bollinger Band on the VIX. And we haven't quite done that. I'll be interested to see if we get any climactic readings on the declines, advanced declines. So I'll keep everybody posted if something interesting comes up on that.
All right, sounds good. Taking a look at this SGMO, the question was, how can I find out which group it is? Well, if you put in the full quote, so next to the volume here, there's a little button there. If you click on that full quote, it'll give you a lot of information here in the upper part. And one of the things it says here is healthcare/biotechnology. So that would be one way. Another way, I have a style button here for a relative chart. So for instance, if I was considering SGMO, I would pull it up here. And what I have is the price chart of SGMO. Then I have the sector that chart is, or that company is part of, which is the industry group, which is the biotechs. And then I have a chart of the stock versus the biotech, the stock versus the S&P, and then the industry versus the S&P, all on one chart. But that is one way. If I have a stock, I just quickly click on my chart style that gives me the relative chart with all of this industry and sector information to find it. But I wanted to pass that along. And with that, as far as the market goes, yeah, I mean, we're getting a big reversal. We'll see whether or not it holds into the close or whether we get the buying that comes right back in like we typically see. It seems like every time we get a little bit of selling, we get a bunch more buying right on the heels of it. So we'll have to kind of check that out. But yeah, I mean, I still think the market looks pretty strong here. I want to thank everybody for being with us today, especially Scott Carney from HarmonicTrading.com. Our special guest today. That was fun talking to Scott. Please remember to complete the survey as you exit. We love to get your feedback to hear what you think of Market Watchers Live. And as a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Wednesday afternoon, everybody. See you back here on Thursday. Happy trading.